Welcome to this question. We're looking at November 2019 question number 3b, Suleiman Kombo. We are told that Suleiman Kombo is employed as the managing director of Utamu Distributors Limited, a tax-exempt company. During the year, he presented the following information. Then you're required to determine the total taxable income for Suleiman Kombo for the year ended 31st December 2018, the tax payable if any, as well as to comment on any information not used in the computations above. So let's look at the information. The first note, we are told that his basic salary was 120,000 per month and the payee was 48,000 per month. Since we are going to determine his annual salary, it means that we have to apply a factor of 12. It means that for his basic salary, we have to $120,000 times 12, which gives you 1.440. And then credit will be granted for the payee that has already been deducted at source at 48,000 times 12, which gives you 576,000. Quite straightforward. Note number 2. He was provided with lunch by the employer from 1st August 2018 of 4,800 per month. So, the first thing to note is the date. The lunch offer has started from 1st of August and we are preparing our accounts up to 31st December. So how many months are those? August, September, October, November, December. Those are 5 months. So it means that he has gotten this benefit of 4,800 for 5 months. So what becomes the lunch benefit? It becomes 4,800 times 5 months, which gives you 24,000. So he will be taxed on this. Let's now go to note number 3. Note number 3 says that he was provided with a fully furnished house fitted with water and electricity. The employer paid a monthly rent of 45,000. He was deducted 10% of his basic monthly salary for rent. The cost of furniture is given there, while the monthly electricity and water bills are also given there. Now, the key thing that we have to determine here is the housing benefit. And one thing that we always say is that the housing benefit is always computed last. Why? Because one of the bases that we shall use for determining the housing benefit uses a percentage of all your other employment income. So it means we have to determine all the other benefits and then the housing benefits will be the last one. Okay. Having said that, there are some few things that we will notice. That once we determine what the benefit is, any amount that he has paid himself, you see, we're told that he was deducted 10% of his basic monthly salary for rent. So any amounts that will have been deducted from his salary will be deducted from the benefit. Okay. Now, the housing benefit ends at this point. So the stories about the furniture is separate. Okay, so let's see. We're told that the cost of the furniture was 300,000. So what is the furniture benefit? So the furniture benefit will be given as basically 12% times 300,000. Okay, 1% per month on cost, which basically gives you 36,000. The question goes on and says that the monthly electricity and water bills were 3,500 and 2.8 respectively. So it means that for our elec, we shall take 3.5 times 12 to give you 42,000, and for the water we shall take 2,800 times 12 to give you 33,600. Quite straightforward. Note number 4. The company paid for him life insurance premiums of 6,000 per month for each member of his household from 1st September 2018. He had included himself, his wife, and their son in the insurance policy. So now the key thing here is to determine what the amount of the relief is, okay, and the amount of the premiums. So what are the premiums that have been paid? It was 6,000 per month for each member of his household. How many people are in his household? Himself, his wife, their son. So there are 3 people in a household, each for which he is paying 6,000, and he has paid for how many months? Let's see. We are told that for each member from 1st September 2018. So how many months are those? Those are 4 months. So when we work this out, we get it is 72,000. Okay. So that is the amount of premium benefit that he has obtained. However, we know that there is something called insurance relief. So how do we determine the insurance relief? It's very simple. That whenever we have insurance relief, we always take the lower. Okay. The lower of 5k per month, which in our case becomes times 4 months, which is 20,000, or 15% of the premiums paid, and the premium was 72,000. So 15% times 72,000 gives you 10,800. So which one do we take as the relief? It is 10,800. We move on to the next. Note number 6. Note number 5. We are told he contributed 10% of his monthly pay towards a registered pension scheme, while the employer contributed 15% of his basic pay towards the same scheme. So when we are looking at the pension scheme contributions, we usually say that the lower of the actual contributions and the set limit of 20k per month, that is to 240,000 per annum, is an allowable deduction. So all we need to do is, if we just tabulate it here, the limit is 20,000 per month, which works out to 240,000 per annum, or the actual contribution. And we have been told that his actual contribution was 10% of his monthly pay. But what was his monthly pay? You remember we had already worked out his monthly pay. It was 1440. Okay. So 10% times 1440 gives you 144,000. So which one do we take? The lower. We move on. Note number 6 says that he enjoyed free medical treatment under a medical scheme operated by the company for all employees. His medical expenses were assessed at 150,000 during the year. Now, here's the key thing that we shall rely on. For all employees. This means that it is non-discriminatory. If it is non-discriminatory, it means that even the directors will enjoy it as a tax-free benefit. However, If the scheme had been discriminatory, that is to say that not all employees are covered by it, then the directors would have been assessed for that benefit that they obtained. Let's move on. Note number 7. Note number 7 says, during the year, the company paid a total of 35,000 as school fees for his son studying in a county school. The amount was not included in the company's income statement for the year. Okay. Now, since the expenses were not included in the company's income statement, it means that the company has not claimed the expense as a deduction, and thus these school fees is to be taxed. Okay, so the company was basically taxed on the amount. As such, it will not be taxed on Suleiman. Okay, now the way it works is that school fees are either taxed on the employer or the employee. So since they've not been claimed, or since the company has not claimed it as a deduction, the employee, Suleiman, can claim it as a deduction. Okay. Let's now move to note number 8. Note number 8 says that on 1st August 2018, the company provided him with the following: a Land Rover, which was acquired at a cost of 1.8 with an engine capacity of 3000 cc. Now, here's the thing. If we are told that we have a car, we have two options. When you have a car, the car benefit will be the higher of the CC ratings provided by the commissioner, and these ones are normally given in your exam paper in the first page, or 2% of the cost per month. Okay, so let's look at this question again. We are told a Land Rover was acquired at a cost of 1.8. So it means 2% times 12 months times 1.8. But here's the thing. Was it there for 12 months? Let's just check. It is on 1st August 2018 that he got this. So we just say 2% times 5 months. Okay. And we get 180,000. Okay. The other alternative we have is to use the CC ratings. We are told that this car had a capacity of 3000 liters. So it's a matter of checking the CC ratings on your question paper. So 3000 cc falls under this category, which basically works out to 8,600 per month. These are monthly rates. Okay. So of course the taxman will take your benefit as being 180,000. Okay. Let's continue. Note number 8 says that a gardener and a night watchman whose monthly salaries were 12,500 and 15,000. Remember, these ones all came on 1st of August 2018. So it's just a matter of determining the rate times the 5 months. All these are benefits. Let's go to note number 9. What do we notice? Note number 9 talks about real estate. So this is not employment income. Ignore that. Note number 10 received dividends. So again, that is not employment income. So remember, we had said that we shall postpone the working for housing benefit until we are done with employment income. And we've seen that employment income runs from note number 1 to 8. So let's first accumulate all these benefits so that we can determine the housing benefit, and then we shall add this real estate as well as the dividend later. Okay, so we're looking for the housing benefit. How do we go about this? So let's tabulate our answer. Starting with employment income, basic salary, which we had already determined from note number 1, to which we add benefits. And what are some of the benefits that we had identified? We had lunch, and the amount of lunch was 24,000. We had furniture, we have electricity, we have water, we have insurance, car benefit, gardener, we have watchman, so this gives us our total employment income before housing benefit. Okay, Let's now add our housing benefit. Which will be the subject of working one. Now at this point, we can deduct the allowable deductions. And here we had the contributions to a registered pension scheme, and this one was given to us in note number 5. So this gives us this one had to have a housing benefit. Okay. Yep, I think that's okay. So now to this one, we have to now add other incomes. And this has to do with the rental income in note number 9, as well as the dividend income from note 10. Let's now go through them. So we are told that he invested in real estate and earned a net rental income of 72,000 after deducting the following expenditure. So we're given the various expenses there. Now there are two ways of looking at income tax relating to rent. You have the option of treating it like a business, whereby you take the gross rent, then you less expenses, and you have the option of just paying tax at the residential withholding tax rate of 10% on the rent income, which is considered to be final. Now, by virtue of me just seeing this information here, the gross rental withholding tax paid, it means that Suleiman had elected, he had opted to pay the taxes based on the gross income. That means that the rental income will not be assessed further. So all we have to do is just indicate the rental income nil. So now let's look at note number 10. Note number 10 says he received a net dividend of 42,500 from Maziwa Cooperative Society during the year. Now this dividend is not final tax. The withholding tax at 15%, which is the rate applicable for dividends, is not final tax. It will be treated as a credit. So all you have to do is gross up. So we'll say our gross dividend is 42,500 relates to 85%. So what is 100%? Then we just cross multiply. Then we find out that it is 42,500 times 100 over 85, which basically gives you 50,000. So 50,000 is what you are taxed on. And then you'll be given a credit for the variance, for whatever was already deducted. Okay, so let's do that. So what is my total taxable? $22,67, 100. Okay. Have we answered the first part of the equation? Total taxable income for Suleiman Kombo, 10 marks. We are done. We can now move to part 2. Tax payable, if any, from the income computed in B1 above. So remember, we shall just use these tables that are provided to us in the exam. These tables usually change every time there's a change in the Finance Act that affects either the rate of tax or the taxable income brackets. Okay, so just watch out for this and use whatever rates the examiner will have given you in your actual exam sitting. Okay, so let's determine the gross tax payable. So on the first, 147,580, going to be taxed at 10%. On the next, 139,042 at 15. On the next, 139,042 at 20. On next, 139,042 at 25, and then the balance will be taxed at 30%. So what's the balance? The balance is 2267,100 minus 564,709. This 564,709 is the summation of whatever you have already subject to tax here. So the balance is 1702,391. So the balance of this is taxed at 30%, which basically gives us 14,758, 2856.3, 27,808.4, 34,760.5, and 510,717.3, which when we sum them up gives us 608,900.5. Now, once we get the gross tax, we deduct the credits. And they take various forms. The first credit is the payee already deducted. We already have the payee already deducted in note number 1. Which is basically 576,000. Then we have insurance relief from note number 4 of 10,800. Remember, these ones we are all deducting. Then we have withholding tax on dividend from note number 10 of 7,500. And finally, we have personal relief which again is provided to us. And here it is. Personal relief of 16,896 per annum. So when we deduct all these, what do we get? We get a tax refundable of 2295.5. And with that, we have solved the second part of the question to determine the tax payable, if any. So we don't have a tax payable, we have a tax refundable. Then we are asked in note number 3, comment on any information not used in your computations above. This is very simple. So we have number 1. If we just go through them, we will find that there is a free medical treatment, blah blah. So this one, we did not use it, isn't it? Why? Because we said it is non-discriminatory. The second point is in number 7 about school fees. What did we say? We said that the school fees was already taxed on the employer, so cannot be taxed on him again. And then number 3, it was not number 9. We said that we cannot subject the rental income to further taxation because withholding tax is final. So those are the 3 numbers that we can comment on. Comment on any information not used in your computation. So those are the 3 numbers that we have not used, and we've given the reasons for that. And that brings us to an end of this question.